Mike McGlone, I know you're my metals guy, but today I want to start off with another commodity, that being oil. Broke the $60 a barrel mark. Is the high 50s, is that the bottom?
Well, you can't be a metals guy without watching oil. It's the #1 commodity in the world. And the range before the crisis was effectively 50 to 80. 80 was the low, so 50 is pretty good support. Who knows if it holds here, but it's probably going to be in a range for a long time between 50 and 80.
All right, now let's get to gold. It's only up around 1% for 2014. What can we expect in 2015?
Think of the foundation from this year, and that is impressive resilience. You mentioned gold's up. If you had told me or most analysts at the beginning of the year that by this time of the year that the equity market would have made its successive new highs, the dollar would be strong, there would be gold outflows, I would have said, yeah, gold would be down 10%, but it's holding in there. So to me, the foundation for gold for next year is quite positive. So I think if it hangs out and can hold this 1,200 support this year, which it looks like it's going to, it's likely to range between 1,200 and 1,400 next year.
Silver, however, is down over 10% for the year. I think it's around 13 or 14%. So is the spread between silver and gold a little bit wide now? Is silver the better play?
The spread right now is about 72, and silver is just plain cheap. Now, it's been going down because it's an industrial commodity like crude oil, but it's just plain cheap versus crude oil. I'll tell you how cheap it is. The last time it got to near these levels was in the crisis in 2008 and 9. So versus gold, it started the year about 60, so we view silver as relatively cheap, and it's also somewhat leveraged gold. Over the last 2 weeks, it's been the best performer, up about 10%. That should continue, but silver is a little bit more subject to this industrial cycle and the deflationary cycle like crude oil has been.
And here's another divergence for you. You have platinum down 10% and palladium up around 14%. Palladium I can understand, it's got to go in those cars, the catalytic converters. What's wrong with platinum though?
Same thing, it goes in cars, but most notably diesel vehicles. And the biggest diesel market in the world is Europe. So we know what's happening in Europe, and also it has, of all the metals, it has the highest correlation to the euro. So the euro's down 10% of the year. Platinum's down about 10% a year, but it's getting, just like all the metals, it's below its all-in or its marginal cost of production. We view the marginal cost of production, platinum, around 1,400, and currently it's around 1,200. So it's hard to say there's a precious metal that isn't relatively underpriced at these levels.
And then finally, you know what's going down also? The yield on the 10-year Treasury is now at 2.16 or so, 2.14. I thought it was supposed to move up. So what's going to happen next week when the Fed gets together?
I think they're going to emphasize the fact that they're data dependent, and right now the data is showing deflation. The last time the Fed began a tightening cycle was June 2004, and at that time bond yields were going up, CPI was going up, the dollar was going down. And crude oil was going up. It's exactly the opposite right now. So to me, the biggest risk for the Fed right now is to tighten and be wrong and accentuate this deflationary cycle, which we're in right now.
Thanks a lot, Mike.
Thank you.
And thank you for watching The Street.